Banks are still taking a risk. So there are still certain underwriting guidelines and criteria that they have to underwrite by in order to extend that financing to you. The program is really there to create better access to capital for the small businesses in America. And so not everyone is qualified for a traditional commercial loan where you need collateral that is worth more than the financing you are getting. In the SBA world, you can get a $3 million loan and have essentially no collateral on that loan because of the SBA program, which that can really either help you buy a business, grow your business. It can do a lot for the small business economy.
And now, it's time once again for the show that gives glorious voice to 25 million business owners across the fruited plain. Radio Free Enterprise with Frank Felker.
Thank you, Dude Walker. Yes, indeed. I am Frank Felker. Welcome back to Radio Free Enterprise. My guest today is Mary Soldano. Mary is an SBA Business Development Officer with Truliant Federal Credit Union. Mary's calling in today from the greater Philadelphia area. Mary, welcome to Radio Free Enterprise.
Hi, thank you so much for having me.
I'm so happy you're here, Mary. I want to ask you a bunch of questions about a topic which you are quite expert at, but which causes a lot of confusion for a lot of small business owners. And that has to do with SBA loans, SBA as in Small Business Administration. So people, I've heard people say they don't understand small business or SBA loans. They have misconceptions, especially about what exactly gets guaranteed and what they're going to be on the hook for, and how to apply and how long the process takes, just all kinds of things. So I appreciate you taking the time to come and get us all straightened out on this.
Yeah.
So first off, could you give us your sort of 40,000-foot view of what exactly an SBA loan is and how does it differ from, I guess we might call it, a traditional business loan?
So an SBA 7A loan is very different than a conventional loan that traditional banks offer you. So SBA 7A, it is a government program, and they use bank intermediaries to lend those funds. So think of FHA for the first-time homebuyers program or federal student loans. It's under that same umbrella where it's government guaranteed lending, and it is guaranteed by 75%. So what happens is a bank or an approved financing institution lends you their money for the SBA 7A loan, and the government backs that loan by 75%. So sometimes folks get confused because they think the actual government is lending them those dollars. It's not. It's banks like, or credit unions like Truliant, or some of the big guys like Wells Fargo, TD Bank, all of those types of banks. They are lending you their money, and then it is backed by the government if that loan were to go into default. So at the end of the day, you as the small business owner and guarantor on the loan are responsible for paying that loan back. You are first responsible to that financing intermediary, whether it's us or somebody else. And then if it were to go into default, then you are working out some type of payment plan with the government.
Okay, so you've made it clear, but I just want to reiterate, I'm still on the hook for this loan. That Uncle Sam is not going to come bail me out. In fact, he's sort of like going to bail you out, make it easier for you to take the risk on me, because even if I end up blowing it, the government will come and guarantee the loan. Now, the next thing is, I think you did mention this, but the government won't guarantee 100% of the loan amount. Is that correct?
Yeah, so banks are still taking a risk. So there are still certain underwriting guidelines and criteria that they have to underwrite by in order to extend that financing to you. The program is really there to create better access to capital for the small businesses in America. And so not everyone is qualified for a traditional commercial loan where you need collateral that is worth more than the financing you are getting. In the SBA world, you can get a $3 million loan and have essentially no collateral on that loan because of the SBA program, which that can really either help you buy a business, grow your business. It can do a lot for the small business economy.
Interesting. I wasn't aware of that, that there potentially could be no collateral requirement at all. That's interesting. Okay, so if I'm not coming to you with collateral, what are you looking for I assume even with an SBA guarantee from the government, Truliant's not going to loan to anybody who just happens to put in an application. What is it that you guys are looking for from me as a business owner?
Yeah, correct. So there's the SBA SOP, which every single SBA lender has to abide by. So those are our bare minimum rules. And then on top of that, each lending institution has their own credit box rules on top of that they want to make sure their board is okay with and their credit teams are okay with. And so the biggest things, there's, the whole 5 C's of credit, which every lending partner looks at. For us, our biggest items we're looking at is cash flow. So we are cash flow lenders. So can the loan that you're asking for, can the business you're running or the business you are going to buy cash flow for the debt you are requesting? Cash flow and then also management experience is huge. So the people, if you are 20% or more owner of that business, you have to personally guarantee on that loan. So we're looking at the business's operations. What is their business model? How do they pay their expenses? And then the management expertise. Who is this person who, at the end of the day, is on the hook to pay us back? What have they done in their past that relates to operating a small business? How long have they opened this business for? There's a lot of different things that go into all of that.
It's really interesting that it's not just the numbers. It's also the people that you guys are, in fact, you're lending the money to a person and you're putting your faith and trust into that person. And so you mentioned a couple of things, management experience, the specifics of the business itself, how long it had been in business. Anything else in particular that you would either look kindly upon in a business or frown upon that you would find in a business application?
Yeah. And so this is a great question, Frank, because every SBA lending institution is different, right? So there may be a loan that I would say yes to that another lender would say no to, or the opposite as well. So the industry is a very special place because I get probably about half of my referrals are from other SBA lenders in the country. And so we are able to learn each other's credit boxes so that at the end of the day, we're still helping that small business and that entrepreneur. So for example, we at Truliant, we're okay with some of those larger, we call them airball deals. Let's say you are buying a business and it costs $1.5 million, but the cash flow is great. You have direct industry experience. Let's say it is it's a restaurant. We're not afraid of restaurants here. There are other lenders who are. And let's say you've been in the restaurant industry your entire life. You know how to manage the inventory. You know how all of that works. That is a deal that we would do. And on the contrary, right now, we are not big in the construction industry. So there's industry specifics as well that certain lenders will or will not do. Now that could change over the next couple of months. And another lender that sometimes I will send those deals to another friend who is at another lending institution who would be more applicable to do that type of transaction. And so it's really important that the folks who are in my position as a business development officer know what their credit team is going to want to do at the end of the day and know where to pass and then refer to other colleagues in the industry.
I want to come back to the issue of cash flow if we could. That's a lot of different ways to look at the word cash flow. I often say that profit is a theory, but cash flow is reality. And, do you have money coming in? Just because it's on paper that you're making a profit doesn't mean you're going to be able to make payroll on Friday.
Yeah.
So when you guys are looking at cash flow, I assume also what you're saying or what you're looking at is, can we carve some of that flow off, move some of that river of money in a different direction to make these payments and still allow the company to operate? What percentage of cash flow would be a limit for the payment, the monthly payment?
Correct. So SBA has a minimum cash flow ratio of 1.15, which means you can pay all of your expenses at least once, and then you have 0.15 left over. And that is including your debt service. That is the SBA's minimum. Now, depending on the loan size, we like to see a little bit higher than that. So if my loan size is above $1 million, I would like to see closer to maybe 1.2, 1.25 on that cash flow ratio. There's other lenders who won't do it unless it hits 1.5. And then it's also important
Wow.
to know you're not just looking at today, 2024, you're hitting that number of 1.25, for example, but we need the last 2 periods to cash flow of that, which would mean 1 filed tax return plus your interim P&L statement. Where there's other lenders out there who they may need 3 periods to cash flow at that point. And so that's why it's really important to make sure when you're talking with a prospective SBA lender, you're learning what their rules are, that you're asking, okay, is this an SBA thing or is this a your specific credit box thing? If you're able to get access to that capital somewhere else or not. Yeah.
Okay. Now, it's funny. There's so many questions that come to my mind, and we could just go down multiple rabbit holes chasing after these questions I'd like to get answered. But instead, I'm going to try to stick to my outline here. It's become clear through what you've said that I'm going to put myself in the position of the business owner who wants to get a loan. I'm borrowing from you and Truliant or whomever I'm borrowing from, not from the government. Right. And you've also made it clear that different lenders have different criteria and some will look favorably on different types of loans and so forth. So if I'm looking for an SBA lender, how do I start that search and what should I be looking for?
Yeah, so there's a number of different ways you can find an SBA lender. It depends on, sometimes it depends where you're located. So you could go to your local lender, your local banks, and see if do they provide SBA loans to people. There are a lot of lenders these days who are on interviews, right? Or podcasts like this one, for example. So you could reach out to me for an SBA loan if you'd like one.
Of course.
Or so LinkedIn has become a huge power source of just like referral networks for SBA. I'm probably, most of my news feed is just tons of SBA lenders asking, hey, who can do this deal? Here's a recent deal I closed. And then there also are still traditional loan brokers out there. There's a couple of really great ones who specialize specifically in SBA lending. And then there also are business brokers out there. So if you are in the process of buying a business, you could also utilize your business broker's contacts. You could also there's just tons of different ways. We're all over the place.
So you guys are not doing a good job hiding from us. You want us to find you.
Yes. But it is important. It really kind of depends on what you're asking for, is who you should work with. So if you have a really strong deal that it cash flows really well, it's fully secured by commercial real estate, you may be able to go to your local bank and get an amazing rate and they may be able to help you. They may take a lot longer to do that, but it depends on what you're paying for. You may get a really better rate at the end of the day. Where there's some national lenders like us at Truliant, and there's a number of other ones in the country who we work a little bit faster and we are okay with the true just cash flowing deals with a very little collateral. So it's like deal by deal specific depending on what you need.
But is there any way for me to know, for example, let's say I own a restaurant, how to find an SBA lender who likes restaurants? Or is that just something maybe I'll speak to the first one says no, and I should ask them who might say yes?
Yeah, there's not really, so there is the list of the top active lenders in the country. You can find that on the SBA's website. We just cracked that top 100 list as a credit union.
Oh, that's great.
But so you can go on that list and typically like whoever's in the top 100, they're going to be more apt to doing a bunch of different industries because they're actually lending. That's a good place to start. I would also advise once you get a lender on the phone, be very upfront and direct about, hey, this is the industry I'm working in. Here's the hair on the deal, right? Like whether there's no collateral or I had something happen on my credit last year. Be very, very upfront about that hair. That lender will appreciate it. They're going to know if their credit team can mitigate it, or they'll know right away if they need to pass you off to a friend or a colleague to help you get that transaction done. I've seen a lot of folks over the last couple of years, they call and they ask you a million questions. And then at the end, they're like, oh yeah, and this is what I'm looking at doing. And you're like, I can't do it here. And so if you're very upfront about what your situation is and what you're finding, then that lender will be able to tell you very quickly if they're able to do that deal or not.
Interesting. Well, and I will include all of your contact information in the show notes for this interview, wherever you may be watching it right now, Mr. or Mrs. America, whether it's audio, video, or elsewhere. Now, tell me about the application process. How is it different from a more traditional loan? Does it take longer? Is it shorter? What's it like?
Yeah, that's everyone's favorite question is how long does it take for me to close? It's probably way before they even get approved. They're asking when can we get to the closing table? And so that also is going to depend on the lender that you are working with. Of course, it's lender by lender. But there are certain things that rely on you as that borrower. So every lender can only move as quickly as possible with the information you give them. So a lot of us like to say the average timeline is around 45 to 60 days from start to finish. And I say average because obviously we've seen some that go by faster and there's some that drag out for a little bit longer. Most of that timeline is in collecting paperwork and documentation. And so I try to break it up into 3 different phases. There's your term sheet or like pre-approval, some folks like to call it. And in that phase, we ask for a short needs list. So it's basically last 3 years of financials for yourself, your business, personal financial statements, and your resume. And then what is your ask? Are you buying a business? Then we want to see that business's financials as well. Are you buying commercial real estate? We need to know what that address is. And with that information, most good lenders can do a quick pre-underwrite of your transaction and then issue you a term sheet if they're confident that they're able to get you to the closing table and get you approved. If you sign that term sheet, then you go into underwriting. It's all another checklist of documents. And then it's basically business plan, cash flow projections, all of the SBA application paperwork, and all of this can be found on the SBA's website. And most lenders too also have these like checklists on their website. So you can get very well prepared before starting the process. And then once you're approved, it's the closing process. Everyone super excited about the commitment letter, they sign and they want to close like 2 days later. That's impossible. So basically closing timeline is usually around 30 days. And I say usually again, because it's going to depend on third parties and on what you're doing. So if you're buying commercial real estate and you need an appraisal, that's going to take some time. Typically, once you sign that commitment letter, your lender is going to give you a closing checklist. And then at most institutions, once everything on that checklist is done, you can close a few days later. So it's really a matter of how quickly can you work and your attorney work, or can you and the seller work together to complete all of those items on the checklist. And I always advise folks, ask your lender a lot of questions. If you get a checklist and you just like start doing stuff and you don't know if it's correct or not, ask the lender. Say, okay, this is what you're asking for, a collateral schedule. Am I putting the right information on this? Because if it's not correct, they're going to send it back to you and you're going to have to correct that. So never be afraid to ask questions in this SBA process. It can be a long process. So it really matters on who you're choosing to partner with.
That's great. That was a very thorough answer. So I'm picturing myself at the closing table. Do I get funded at the closing table? When do the funds arrive?
Yeah. So most of the time, it depends on what you're asking for. So under the SBA 7A umbrella, there's tons of different use of funds that are eligible for financing.
I see.
One of those is buying commercial real estate. That would be, everyone gets funded at the closing table. Title either is wiring it out or sending checks to the appropriate parties. You're able to have working capital as a part of your loan request as well. So let's say you're buying a building, but it's going to take you some ramp up time to move all operations over. You can include 3 months of working capital expenses. Same thing with buying a business. Most SBA 7A loans are closed and funded on the same day. Under 7A, you can also do construction loans as well to the commercial real estate you're operating out of. Those would not all be funded on the same day because you're going to have to be working with your contractor. So most of the time you are funded the same day, but it's going to depend on where all of those dollars from the loan are going.
Well, I'm going to fall down one quick rabbit hole. If the transaction involves real estate, is there also going to be the typical title search and all the paperwork we might see in a residential purchase?
Yes. Of course, all of that. So, and it depends on when you want to engage all of that as well. So there's folks where they have to meet a deadline. And if they don't meet that deadline, they're going to lose that property. They can, while the loan, before you get officially approved, you can start ordering your appraisal. You do have to get environmental reports in SBA as well, depending on the condition of the property. So that could either mean a low-level risk assessment or it could mean a full-blown phase 1. All of those things take time. And then, of course, all of your recommended title as well. So SBA has certain title requirements that every lender needs to abide by in their title policies.
Now, you guys are preferred SBA lenders. Can you tell me what the advantage is of working with a preferred lender?
Yeah, so the biggest advantage is that we can do that stamp of approval ourselves without having to submit your entire loan package to the SBA. So there's preferred lender status. That's all that means, basically, that we enter your information to their system called eTran, and then we're able to pull down your approval number. The SBA did make an update last year where they go through different data checks to make sure that, you're a for-profit business or your EIN number matches and social security number hasn't been used for fraud. So it used to be instantaneous where we could pull that number. Now every lender has to wait around 48 hours to get that number, no matter what their status is. And then there's GP lenders, which just means general processing. And so that means once you get approved by your bank, you then have to submit that whole loan package to another person at the SBA to also approve it. Now, it used to take a really long time for GP lenders to get that approval. It has gotten a lot faster in the last couple of years, and you can simultaneously start the closing process. So the biggest advantage is you just know you're really approved faster with a PLP lender, where a GP lender, it may take an additional 2 weeks for that approval.
Now, you are in the greater Philadelphia area, but am I correct that you are able to help people with SBA loans anywhere in the United States?
Yep, that's correct. So this past year, a team of us were brought on to Truliant. They're based in North Carolina, and we were brought on to expand their national SBA 7A footprint. So I'm based in the Philly area, but I can lend anywhere in the country.
Mary, the last thing I wanted to ask you about has to do with changes in the SBA approval process, or you name it. I've heard that there have been some changes in recent years. Can you speak to that?
Yeah, over the last 2 years, there's actually been a lot of changes in the SOP. And so that is the big book of rules that every SBA lender has to abide by. One of the largest, there's been a lot, but one of the things that I'll focus on today is around equity injection. And that is for every use of proceeds. And so part of that is when you buy a business, it used to be a requirement that you had to do 10% of the total project cost you as the buyer had to put in. And if any seller financing was going to count towards that 10%, it would have to be on standby for the full life of the loan. Now, though, they've changed that seller financing portion of it to be a little bit more flexible and more favorable to sellers. For example, there are now 3 ways seller financing can count as equity injection. It still is for the full life of the loan. So what that means when I say standby is that the seller doesn't see a penny of their money until you pay off that SBA loan. That's what full standby means. And so the other options are now partial standby, which would mean interest-only payments for a minimum of 2 years, and then the loan must amortize out, or standby for 2 years only, and then the loan must amortize out. None of those facilities can have a balloon in order for it to count as equity injection. This is huge because it really creates access to capital for folks who are looking to buy businesses and need that seller financing to help bridge the gap in equity injection. A lot of sellers, if you ask them, can I do a standby note for the whole loan? They want to see their money faster than 10 years. But some are okay seeing it in year 3, you're getting interest-only payments in the first 2. That's the biggest change. Again, that is per the rule book of SBA. Some lenders are abiding by it, some aren't. We are using it. We love seeing seller financing and business acquisitions. It shows that the seller really believes in the buyer who's going to help take their company to the next level.
You know, that your answer there made me think of a question I had intended to ask, which is, what sort of term lengths do these loans normally stretch out over?
So business acquisitions are 10 years, 10-year amortization. If it includes real estate, that is more than half of the proceeds. It can be stretched out to 25 years.
Great. Well, Mary Soldano, thank you so much for joining me today on Radio Free Enterprise.
Thank you for having me. It was an honor to be here.
Thanks again to Mary, and thank you for joining us. Until next time, I'm Frank Felker saying I'll see you on the radio.
You can't seem to turn a profit? Is that what's eating you, Sparky? Well, you've come to the right place. Radio Free Enterprise.